Hello everyone. This is the pre-market report video for today, 20th February 2025 for the Indian stock market in terms of Nifty and Bank Nifty. Last night, if you see the S&P 500 price movement, that itself will tell the whole story of what happened. I mean, till 2 p.m. Eastern time, or we can say till the time of Fed meeting minutes release, for most part of the day, US market was under pressure. However, when the meeting minutes was released, S&P 500 completely trimmed its loss and moved into the positive territory. To be honest, in the Fed meeting minutes, there is no new thing, but still I will summarize it. If anyone fancy reading it fully, I will attach in the description below. Please have a go. In summary, all the participants agreed that Trump tariff will make the inflation to go higher, and without that itself, inflation was persistent. So they want to proceed carefully, and thus all the members unanimously don't want to cut the interest rate quicker, which most of us already know. But the new very important thing is some FOMC members shown interest and had an in-depth discussion of slowing the pace of reducing the Fed's balance sheet. Reducing the balance sheet is called quantitative tightening. It's an additional way Fed used to control the inflation by reducing the money supply. Just for info, Fed have been reducing this in the last 2 years for the money they used during COVID. Now that balance sheet reduction expects to complete by mid-2025 around. I mean, this is positive. If Fed stops reducing their balance sheet means private players and US government can utilize those investment as system gets more money. Overall, for now, they want to pause the interest rate and no new news. So in the end, Dow Jones increased by 0.16%, S&P 500 increased 0.24%, another day fresh all-time high closing. Nasdaq was up by 0.07%. In case of US VIX, it decreased mildly and below 15.5. Regarding oil, it didn't change much, but there is a tension escalation between US President and Ukrainian President Zelensky regarding the Ukraine's natural resources. Anyway, at the time of this video, WTI crude trading around $72 per barrel and Brent crude traded at $76 per barrel. Then coming to Indian ADR in US market, more or less it just followed the Indian market. I mean, both IT stocks, Infosys ADR and Wipro ADR closed negative, whereas banks closed positive. However, if we calculate the arbitrage means, then the status will be opposite. Both IT stocks indicating positive bias and both banks indicating negative bias. About Gift Nifty, today early morning it traded at 22,940 mark. Here, yesterday at the time of closing, there was no premium with spot market. On that basis, it's indicating flat opening with some negative bias. So those were the things happened in the dollar market yesterday. Now let's look at the India related info. Yesterday early morning for US, it was Tuesday night. US President Trump made the threat that he is going to impose 25% tariff on pharma product, automobile and semiconductor, which in turn affected our IT companies, pharma and auto auxiliary companies. However, financials, metal, PSU bank and realty compensated on the positive side. Hence, despite the volatility, Nifty closed flat for the fourth session in the row, and overall again for the second day in a row, 70% listed number of stocks closed negative and 28% was up yesterday. About institution, FII again back as sellers. They net sold for 1,900 crore rupees and DI net bought for 4,800 crore rupees. About the participant wise open interest analysis, in the index future market, the status is the same, but one important thing to notice, proprietary traders reduced the long position from 63% to 59%. Basically, not bearish but less bullish. Then about the option market, retail traders maintains their bullish stance with a net bullish difference of 5%. On the other hand, as usual, FIA having bearish stance with net bearish difference of 4%, which makes more money if market goes down. In case of proprietary traders, they are more of neutral with negative bias. Those were the takeaway from yesterday's Indian market. Anyway, moving on. On the macroeconomic front, I got both positive and negative news. Honestly, I don't know for which market is going to react for it. So I will tell both the things and leave it with the viewers. First, positive. In the aftermarket hours, RBI released their monthly economic bulletin. If anybody wants to read fully, please have a go. It's a 184-page document. I will tell what I know, but today investors will try to analyze this document and market reaction may change over the time. In short, high frequency indicators like vehicle sales, air traffic, steel consumption, GST collection, all indicating the India's economy momentum to pick up in the second half of the year, which is good. Then the additional positive point regarding the banks was Indian banks able to issue 44% more certificate of deposits CD this year so far compared to a year ago. Basically, what it conveying is banks improving their loan to deposit ratio. So those were the positives. Then on the negative side, yesterday Goldman Sachs released the report that Trump tariff might reduce the India's GDP growth up to 0.6%. This is a serious concern as already our economy is slowing. So which news market will react? Only time will tell. As a summary, US market closed positive and Fed FOMC meeting minutes was as expected. So even US VIX it haven't increased much. So global momentum is okay. However, GIFT Nifty indicating flat opening with negative bias. Then as per stock open interest, Dr. Reddy's, Dauber, TCS, Hindustan Unilever, Adani Green, Crompton and M&M got an increase in open interest along with a negative close indicates the short build-up. On the other hand, BSE, Torrent Power, NHPC, Laurus Lab, Shree Cement, Prestige and Union Bank of India got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, before our market hours, Chinese industry decision is due to release. For now, Chinese central bank expects to pause it. Then during our market hours at 12:30 p.m., Germany's wholesale inflation is scheduled to release. Then after our market hours, first at 5 p.m., RBI's meeting minutes is due, and in the night, US PMI data, weekly jobs data, Philadelphia Fed manufacturing index and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 100 points gap down but immediately had a recovery and climbed above the psychological 23,000 in the morning. However, it could not sustain and closed flat with a negative bias. Thus, on the daily chart, Nifty formed a bullish candlestick pattern with an upper shadow with a higher high, higher low formation for the second session in a row. But on the negative side, this upper shadow indicating selling pressure at higher level and Nifty is still trading below all key moving averages with a negative bias in RSI and MACD momentum indicators. Hence, on the lower end, 22,800 is likely to be the crucial support and a decisive fall below 22,800 might trigger a meaningful correction. However, until that happens, we can expect the market likely to remain range bound. On the higher end, 23,000/23,150 might act as the resistance and a decisive breakout above 23,150 could induce a significant rally. In case of Bank Nifty, it opened 200 points gap down, however, outperformed Nifty and closed above 49,500. Thus, on the daily chart, Bank Nifty formed a long bullish candlestick pattern resembling a bullish engulfing pattern, though not a classical one. In addition, it closed above both 10-day and 20-day exponential moving average and also above the midline of the Bollinger Band, signaling a positive trend. Hence, a move above 49,600 could trigger short covering and push Nifty towards 49,800 and then 50,600. On the options front, the maximum call option openers was at 23,500 strike, followed by 23,100 and 23,000, with maximum new call option rating at 23,100 strike, and then 23,500 and 23,400. On the put side, the maximum openers was at 22,500 strike, followed by 22,000 and 22,800, with maximum new put option rating at 22,800 strike, and then 22,500 and 22,100. Thus, from options data, the immediate range of Nifty could be 22,800 to 23,100 with hurdle at 23,500 and support at 22,500 in the short term. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.